Most traders get trapped by price. Smart traders wait patiently where the real money enters. In this video, I'll teach you how to trade using order blocks, the same zones institutions use to stack billions in winning trades. Welcome back to Smart Sense. This is Class 3 of the Smart Money Masterclass. By now, you understand market structure and how liquidity is harvested. But today, we move into the home base of smart money, order blocks. What exactly are they? An order block is the last bullish or bearish candle before a major market move, a zone where smart money places large positions to cause a shift in price. These zones represent accumulation, bullish OB, or distribution, bearish OB. They aren't new patterns, they read just footprints the institutions can avoid leaving behind when they place significant orders. Let's simplify it. You're watching a downtrend. Suddenly, price reverses aggressively, breaks structure to the upside. Before the move, there was a strong bearish candle. That's your bullish order block. Why? Because that final pushdown was a trap. It triggered retail fear, grabbed liquidity, and let institutions fill long orders at discount prices. Once filled, boom, the market explodes upward. The same logic works in reverse with bearish order blocks. How to identify valid order blocks? To avoid false zones, smart money traders use 3 key confirmations. 1 break of structure, BOS. Price must break a previous high or low after forming the OB2 imbalance or fair value gap nearby. OB has more significance when close to unbalanced price moves. 3. Liquidity grab just before entry. The OB is stronger if price sweeps liquidity before returning to the zone. When you see all 3, BOS, imbalance, and liquidity sweep, the order block is premium grade. How to trade them? Step 1. Mark the last engulfing candle before a structural shift. Step 2. Highlight the open, close range as your OB zone. Step 3. Wait for price to return with a confirmation on lower time frames, choke, reaction wick, or flip zone. Don't chase the reaction. Wait for price to return to the OB. Patience, professional entries. You're not here to catch every move. You're here to catch institutional quality trades. Common mistake to avoid: not every candle before a move is an order block. If there's no BOs, no liquidity sweep, no imbalance, it's just noise. Smart OBs leave a trail. Retail zones get broken. Institutional zones get respected. Quick recap. Order blocks, current zones where institutions place their trades. Look for OBs before explosive market shifts. Validate them using BOS, imbalance, and liquidity grab. Use confirmation entries. Don't gamble. Trade what institutions respect, not what retail traders react to. If that made order blocks click for you, you're no longer retail. Hit like, subscribe. Because in Class 4, we're revealing the real secret. Market Structure Mastery, BOS, choke, and how smart money times reversals. Let's go deeper, smarter, and further with Smart Sense.